Nice. We are live, everybody. Showing weakness this morning. That is, it's gonna be a problem. Oh, see, reading on.
Secured overnight financing rate 5.32% for December 7th. It's unchanged from December 6th.
That's high. High. Doing a little bit of prep before the data comes out. Oh, volatility might come. Can you trade volatility in the S&P? Market seems. See if there's any news you can pick up from. Set. Oil trades in the bucks. Gonna make one for that one. Two is in the middle, right here. You have the news. Now we see reaction in every single market and make short.
So, good morning, traders, and welcome to the US session now on Financial Juice. Just going to go over some sentiment and the docket ahead of today's session. So, the futures contract for the S&P 500 and the Nasdaq 100 indexes were little changed on Friday as of 5:30 a.m. in New York, as oil paired its recent losses. On Thursday, fresh enthusiasm about artificial intelligence and the tech industry in general lifted the two benchmarks by 0.8% and 1.5% respectively. So investors have been taking a breather after the steep November rally as they weigh elevated valuations and the odds that the Federal Reserve can curb inflation without tipping the world's biggest economy into a recession. So as traders awaited a pivotal US jobs report, stocks rose and bonds fell today. So, of course, at 8:30 a.m. Eastern Time, we do get US jobs data. So, US unemployment rates, US unemployment data for November, non-farm payrolls, median forecast for this 183K, prior 150K, with a range of 275 to 45K. The unemployment rates, average earnings year over year, average earnings month over month, and average work week hours. And at 10 a.m. Eastern Time, we do get UMich data. It's the University of Michigan December prelim. So sentiment, the 1-year inflation and 5-year inflation.
Let's go. And the day begins, everybody. It up, sitting at 34. The premium. A little bit. Kind of nice. Gotta click that. Mm, thing I don't like. US dollar is a little bit higher today. For the Canadian dollar. What? For the Canadian dollar. Dollar shrink. Guessing is the commodity currency. Nor farm payrolls. Let's have a look at what the market has to say. Gonna hide all my icons. But chat. Fine. Getting it's understandable that we're seeing some resistance. Like if you look at the weekly, we broke through it, tested it as resistance, bounced back. The next level in the little cup and handle. I sort of got some people see the crazy things, and I sometimes makes sense, but man, it's hard to say that it's something here. Cup and handle. It's far fetched. I'm not gonna lie, but they do appear every now and then. It's kind of nice. Back to the and see. Yeah. The arm trade has been an interesting one. Higher than IPO level. Still sitting. We in a bull market? That is a question that we have to answer. I don't think we're in a bull market, but we are, you know. That little bounce sort of like started it all quick and hot. That's why you got to be long markets because you don't know when that's going to happen and all of the buyers are going to decide to get. That's why you have a long term and a short term portfolio. Short term, you play the ins and outs, but term you got to pick stocks. You got to pick the companies that you like. Stay with them for sure. Now, farm payrolls is definitely interesting. Is anything you guys don't know about? People that are going to be speaking in my ear, giving me the data, financial juice people. I don't get paid by them, but they're great and I use them every free ads, baby. Yeah, it's hopefully, positions are set, but the VIX is an interesting trade right now, that's for sure. That's for sure. because any major movement is gonna cause mayhem, and the VIX is pumped today. It's so low right now. That's the thing. No matter what, VIX will always pump. Right now, we're sitting at the low. I got cut out on this trade. It happens. Another question would happen. Is it going to happen in December? Or is it going to happen in January? Expectations right now is we get cuts by March. What is backs up? Like 5 days. There's no hike priced in for now. Imagine like non-farm payrolls comes really bad. We lost jobs. Whoa, wouldn't that be? But then the recession story. So the two major stories that we have right now is recession, Fed. Those are the two stories driving the market. Non-farm payrolls coming in within range, within 160 and 180. That's great. You leave the markets alone. Just let it continue. We're gonna be in a range in December, I believe, because all the all the tax harvesting stuff. Right, you have major players in America kind of buying and selling. Most of the world ends in December. A couple of countries that don't tax harvesting. The UK. January, expected to stay the same. 2.1. 14. That's crazy though. 14% that we get a rate cut in January. And then we don't have anything for 2 months, and then we're expecting a 50-50. But 50-50 towards the cut, which is nuts. I don't think that's an expectation. I think that's a coin toss, right? And then May, we definitely go for the cut. So we are gonna see some turbulence coming up. The Fed is not gonna change the rhetoric unless they meet like either one of their mandates freaks out. So we'll see. Let's have a look. Try this out. So yeah, we'll look at Finbis. Let's look at the overall market and see what's up. Like market is waiting for it. The whole news has been just waiting for it, waiting for it, waiting for it. The whole week has been that. Like we just traded in a range, right? I think the ADP reports, but last time the ADP reports was bad too, you know. I don't trust it at all. You gotta win it back, and then non-farm payrolls is definitely gonna move it. By the way, if you have any questions, if you want me to talk about anything in particular, give me your thoughts before the data. Let me know. There's still 19 minutes before you have to actually pay attention. Well, actually 15, because after that we gotta get in. The whole world is stagnant, baby. Apparently, India's been doing great. He has been doing fantastic. Wait, good futures. Let's see what they're saying. Gasoline up. Hopefully, like, well, I think what's it called? Jobless claims actually pumped this number. There's a buildup in gasoline, but crude right now it's showing there's a lot of consumption, and OPEC Plus is cutting massively. Brazil is gonna jump OPEC Plus. Scary times. Scary times. We have Venezuela invading freaking Guyana. That's in the So there's definitely gonna be like an oil opportunity coming up. So we definitely, we're gonna get the whiplash, and that happens. Definitely gonna see some sort of. It always happens where if you're producing too much oil, you cut, and then you cut too much, and you go back to a normal level, and that's when you get in. It's hard to know when that is, but if we're heading into a recession, they're gonna have to cut production, cut rates, and people are producing again. There's gonna be a deficit. They're gonna increasing production. The European stocks are up. The dollar is down. Oh, dollar's up. Dollar's up. Oh wow. Okay. Yeah, dollar's up today. Nothing major. Not coming back to a normal level. We're getting more traders starting to trade. Interesting. Your computer's holding up. Stream is showing quite nicely. Short-term portfolio is flat. Google down. SBY down. Microsoft down. Let's now this technology, guys. Wow, we are seeing a bit of weakness here yet, but there are people setting blitz right now. People trading in. That's one solid trade. Somebody will bought in quickly. Free market. Nothing. Well, but he bought the same in the Nasdaq. It's just smaller. Let me know your thoughts on what you think the market's gonna do. I think non-farm payrolls is gonna come hotter than expected, given the fact that Black Friday enticed a lot of people higher during those times. I think Amazon was hiring during the time. It was like quick in and out too. Like we maybe see some odd numbers. I think market data is going to be strong November, and potentially in December we're going to start seeing declines, and then January, February is when we start seeing stuff come down very rapidly. Recession is in the books, but they've been saying that for a whole year, and we haven't gotten it yet. It was more resilient than expected, but the thing is it changes quick. Not all like it's one company starts laying off people, everybody, you know, the theory that bad news comes all at once. But look, right, 14 minutes before market data comes out. GBP position, man. GBP expensive. Sitting on 1.5. Gonna be interesting to. That's I think that the real estate opportunity in the UK um and I don't think it comes from the decline of real estate prices, or maybe it came already. It was the pound. Pound dropping to massive levels is what would allow like international investors to take advantage. The UK is advanced financial, very nice. Figure their banks out for sure. Safety, there's access. Not good for the UK government, but I'm amazing for investors too. Crypto up. Look, crypto's up. Major, like everybody, like there's so many people waiting for it. I think all like most traders are paying attention to this, and then you have like big hedge funds trying to make decisions based out of this. Stay in the markets, or I think they're looking for an excuse to kind of get out. I mean, most of them are out. I think everybody's talking about just the recession is coming. The recession is coming. The question is, when do you get out, right? When does the recession start? And hasn't started yet. Markets are forward looking, but you're trading today. Today, the data comes out good. Tomorrow, the data comes out good. That gives you full. Yeah, that gives like of that stuff, right? Good number. Oh my God, recession is not coming. we are sitting at resistance. But sorry for my graphs, by the way. They have meaning. I promise. It's just links with the short stuff too. So I can't hide it. I wish I could hide it. I could delete it all, but but what if it doesn't come back? No, no, no. We're not gonna get another hike because they need to wait. Like what's gonna signal to the market is that there's still more to do. That's the problem. It's not a matter of like the size of the hike, like Powell says. It's a matter. It would be sick though if they actually go and it's like, yeah, we're willing to hike with the numbers. We want to go. It'd be interesting. Something that I want to chart is like, so if we look at it, like let's say every month, right? We looked at it at a 30-day increase divided every day because like they're extending them. I don't think they've stopped either. I think they're gonna go up. Just the rate of increase looks major because all 5, but
At 8:30
hello,
a.m.
hello, hello.
Eastern Time, we get US non-farm payrolls
Weird.
forecast 183K on the prior 150K, with a range of 275K to 45K. US unemployment rate forecast 3.9% on the prior 3.9%, with a range of 4% to 3.8%. Average earnings year on year forecast 4% on the prior 4.1%, with a range of 4.1% to 3.9%. Average earnings month on month forecast 0.3% on the prior 0.2%. Average workweek hours forecast 34.3 on the prior 34.3. Private payrolls forecast 158K on the prior 99K. Labor force participation forecast 62.7% on the prior 62.7%. Manufacturing payrolls forecast 30K on the prior minus 35K. And Canadian capacity utilization forecast 81.4% on the prior 81.4%.
Right now we're getting a
Looking at
bunch
some
of data.
analyst notes ahead of the US non-farm payrolls, Wells Fargo say the most recent jobs report provided concrete evidence of labor market softening, an outcome we have been anticipating since the Fed committed to its battle against inflation. The 150K net payrolls added in October was roughly half September's 297K print. Combined with downward revisions to prior data, October's outrun solidified a trend decline that reflects a labor market gradually losing steam. Wage growth also continued to cool in October as labor demand and supply moved closer towards balance. Average hourly earnings rose at 0.2%, the slowest monthly pace in more than a year. On a 3-month annualized basis, AHE was up 3.2%, a pace that could be deemed consistent with 2% inflation if sustained, when factoring in the trend in productivity growth. The United Auto Workers strike was a one-off factor that dampened payrolls in October. Even excluding auto manufacturing, however, job growth appears to have been narrowing. The share of industries expanding headcounts in October fell to its lowest level since April 2020. We anticipate softening labor demand will remain a theme moving forward. That said, the end to UAW and Hollywood actors strikes look apt to boost November's payroll print by close to 45K. Furthermore, a relatively late survey week should help capture more holiday hiring than in prior years, supporting seasonally adjusted gains. We estimate that employers.
All right, everybody. I have posted things. Data's out. Let's have a look. Let's see what's gonna happen. It's gonna drive markets nuts. Now, quick question. Do you want to see the results? I mean, the results is nothing's gonna happen until like it happens. Important things to watch is S&P, the Nasdaq. Those lead the move. And oil. I'm telling you, I want to buy oil. I want to trade oil so bad. Oil U, another one, tells me it tells me that it's the right trade. If it goes. You need to buy a mouse. It must be great. Hotkeys. I want to buy that Chroma so bad. By the way, if you want to donate for me to buy a Chroma and improve the quality of the stream, feel free, everybody. We take charity. Ting, 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 ting. Lols. Make one good trade and I pay for it. But I don't want to, because then I can use that money to trade again.
At
All right.
8:30 a.m. Eastern Time, we get US non-farm payrolls forecast 183K on the prior 150K, with a range of 275K to 45K. US unemployment rate forecast 3.9% on the prior 3.9%, with a range of 4% to 3.8%. Average earnings year on year forecast 4% on the prior 4.1%, with a range of 4.1% to 3.9%. Average earnings month on month forecast 0.3% on the prior 0.2%. Average workweek hours forecast 34.3 on the prior 34.3. Private payrolls forecast 158K on the prior 99K. Labor force participation forecast 62.7% on the prior 62.7%. Manufacturing payrolls forecast 30K on the prior minus 35K. And Canadian capacity utilization forecast 81.4% on the prior 81.4%. Some more analyst views at JP Morgan say the October jobs report showed welcome signs of easing in a tight post-pandemic labor market.
I don't trust JP Morgan.
Non-farm payrolls rose
I don't
by
trust them at all.
150K, slightly below expectations,
At
with
all.
backward revisions of 101K tempering strong gains from the prior 2 months. The underlying details also looked soft. Payrolls job gains were narrow in scope, and most sectors saw hiring momentum slow, with the private sector only adding 99K jobs.
If I could
ING say next week's data highlight will be the November jobs report. October's was much softer than expected, so there is hope for a bit of recovery. But the trend is towards weaker hiring, as signaled in the recent Fed Beige Book, and the rise in continuing jobless claims. The unemployment rate is expected to stay at 3.9%, but we soon expect it to break above 4%. Subdued wage growth should reaffirm the market's view that the inflation pressures from the jobs market are weakening fast, aided by improving productivity growth. BlackRock say the US payrolls report for November is in focus this week. We are looking for signs that the job growth is slowing further as the post-pandemic normalization runs its course. Structural labor shortages as the US population ages means the economy will only be able to sustain a fraction of recent job growth without stoking inflation again.
A lot of buying. There's buying in the pre-market. People are betting that it's going to go good. A lot of people watching this. A lot of people. Ah. This is trade. By the way, I have NVIDIA up here for anybody that needs to know. I know a couple of people are interested in that stock, me included, but NVIDIA is going to be, I think chips are going to be fine. As long as the number doesn't come in too hot. Crypto's great, man. Freaking. Not sold. Well, you sold that. I sold a little bit, by the way. A little bit. I didn't sell all of it. Like I sold 5% of my position. Just in case there was a better opportunity. Say, oh, I sold Bitcoin. Oh no. Everybody panic. Right. 2 minutes to go.
1 minute remaining. I'll lead with US non-farm payrolls.
Remain. Non-farms. So we're looking for a number lower. No, within 160 and 180. That is the range. If it's hotter, buy oil. Facts. Checks out. If it's lower, sell oil. Close position. Look. And it's live in 2. I don't have a timer. There's 15 seconds left. All right.
10 seconds.
You're going to see currencies move. You're going to see oil. Oh, that's not good. Came out.
199k, 199k, higher than
More for the
forecast.
Fed, but there's no recession
183k.
fears.
Unemployment rate 3.7%, 3.7%, lower than forecast 3.9%. Seeing upside in dollar, downside in stocks. Private payrolls 150k, 150k, lower than forecast 158k. Average earnings year on year 4%, 4%
That was
as
190.
expected.
That's good.
Average workweek hours 34.4, 34.4 higher than forecast 34.3. Average earnings month on month 0.4%,
Harder than expected. Private payrolls
0.4%
came
higher than
down, but that's
forecast
like
at
oh, that means that's
0.3%.
that means that's
Canadian
government
capacity
jobs.
utilization 79.7%,
Okay.
79.7%, lower than forecast 81.4%. Manufacturing payrolls 28k, lower than forecast 30k. US labor force participation 62.8%, 62.8% higher than forecast 62.7%.
Yeah, that puts more weight towards
US
the
10-year Treasury yields
you go.
jump after jobs data. 10-year
You see,
yield
tech
rises
goes
to
down.
4.274%.
S&P should bounce back because oil's gonna go up. I think those are my thoughts. Don't trade on what I'm telling you. Oh, dollar
So the
strong.
Dixie currently up 0.58%
Dollar
in pre-market trading after the
strong.
non-farm payrolls.
Ooh, that's a Dixie trade right there.
S&P 500 currently down at 0.35%.
Yeah, that's a Dixie trade right there. Yeah. Look, refresh just in case. Let's go to the charts.
US short-term interest rate futures sink after jobs data as
Tech's
traders
gonna go
reduce
down.
bets on
S&P
Fed
goes
rate
up.
cuts
Oil
in
goes up. Those are my
2024.
bets for the end of the day. And dollar up too. Wow. The VIX. What's the VIX doing? VIX is doing nothing. 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 Outrageous. All right. Let me. What's I gonna do? I was gonna check. The dollar index is up. Oh yeah, I was gonna buy pounds. Revolut. Buy some pounds. I like this is for my personal accounts. Everybody, it's not I do it.
And Fed swaps price in less easing in 2024 after the jobs report.
Yeah, 100%. Jobs are hotter than expected. Like the economy seems to be just fine. Like they're gonna cut.
US 2-year Treasury yields rise to
Shit hits the fan.
4.731%. 2 to 10-year yield curve inversion last at
This is
minus
interesting.
45 basis points.
I would love to get zero in the zero in a call right now, just to have a little conversation on what our expectations are for the market. Because right now, I'm sitting on.
Traders pair ECB wages odds now favor 125 basis points of cuts in 2024.
See, it's like every time they cut, it's because like we are like in a recession, so it's already too late. Like, oh, we're gonna cut,
Dollar yen
because
jumps
and
up,
then boom.
last up 0.6% at 145.1.
Oh, I need to buy the pound. I need to buy the pound. For now, short term is
Average
good.
hourly earnings year on year, prior revised 4%. The pound extends drop, last down
Yeah, 100%. Pound, euro,
at
dollar's
one
getting
spot
stronger. This is not showing it
$2.524.
clearly, but if we go to the 1 minute, we can see the increase. Bam. Sitting at 12523. Let's pull the trigger on that. A couple of more dollars here and there. Dollar in my pocket is better than a dollar in the pocket of the banks. Or in this case, every single other person trading against me. See, oil up. Let's go. Would that trade pay off? No, it did not. Yeah, I did. Yeah, I did. I bought at 35. How much did I buy for? I filled at 43. Yeah, well, spread is big. Let's go. Let's see if this makes sense. But this should rally towards the end of the day. The numbers are great. The numbers are great, and they have massive cuts. Like, what? Shouldn't this be good news? It should. This is not gonna move because it's leveraged TTF. Ooh, could have bought better. Bought better. See, we're getting a back, getting bounced back. Hopefully, we retrace it all the way back, and then we have 3 o'clock news. That's gonna definitely get. If the Michigan sentiment. Let's have a look at what. There we go. Yeah, this is the move for the dollar index today. Bam. Fed swaps we have. Was the unemployment data, you think? Good trick, good trick. Oh, the yields pumped? Ooh, wait a second. Yields are coming down. Let's go. Se me olvidó mandarte live. Se me olvidó mandarte live. It's a double-edged sword. It means that the Fed can do more, which leaves open the higher for longer, right? So March looks a little bit dodgier. We're looking potentially April, May kind of hikes, like cuts, and then at least that's what the market's pricing in. Yeah, exactly. Oh man. Hello, hello. How are you doing today? What's up for today? It already happened. We need to figure out a way to tell people what's up. Which I am, sort of, but it's on eToro in a different place. Good time to buy pounds. I just bought a bunch of pounds. Oh, the pound just took a hit. Dollar went up. Value of the dollar went up, which is kind of nice. Kind of nice. Kind of nice. But yeah. We're gonna see. We're seeing some weakness in the. Well,
S&P
we're
500
coming back.
regaining lost ground, currently down 0.18%.
Oil is pumping today. How much you want to bet? Oil pumps today, for sure. For sure. ADP data, don't trust it. I don't trust it. I don't know what it is. I don't understand it. I don't get it. That's for sure. But oil's pumping up today. S&P 500 up today. Chips, they went up yesterday, so they might be stabilized. Maybe we see a little bit of diversification coming out of them. Crypto didn't like those news. It actually went down a little bit. Like, it's nothing major, you know, but it didn't like the news at all. Let's have a look. Solar Edge didn't like those news. I'm looking just to potentially get in. Conviction stocks, don't like them. Right now, they should be flat today, but who knows? It's like it's showing risk on. Like nothing major is happening. Everybody's like, oh, jobs are coming back. Really, like, and you get one news that supports your argument, and everybody goes all in. But then all of a sudden, you get news that tells you otherwise, and you're like, no, no. Tech is definitely down. The Qs are bouncing back. Traders got out of the trade really quickly. We would have to see what happens in the open. We're an hour away, but I don't think anything major. I think we're flat unless inflation expectations going higher, which is a possibility. That's why we have Michigan left. Yeah, we have the University of Michigan sentiment. We're sitting at 3.1, which is not bad, and those numbers can come out higher. Now, the scary talk that I'm listening to, and this is something that's very interesting, is the whiplash effect that there is in production. So when there's like, when prices are high, you usually get a whiplash effect, which is like everybody starts producing and then all of a sudden nobody else wants it because it's like there's too much and everybody has filled their needs. So then all of a sudden then the prices have to come down, and when prices come down, all of a sudden you stop producing as much. Then all of a sudden you go into like the whiplash effect again. So it's sort of like this thing. It's like this sort of like line coming in terms of production. That's one thing that they were talking about. Like one of the guys that I follow was talking about, and then
We
it's
have posted
interesting.
the US non-farm payrolls November report on the feed for all those interested.
So look, but the unemployment rate is coming in lower than expected, which is great news. But I think that is because of like short-term hype. I think that there's a lot of hiring in November because of Black Friday stuff. My thoughts. I think December is not going to be as good, and I think like potentially the moment to start getting sort of out is now. Oh damn. 7 views for non-farm payrolls. I'm excited. It's not a video, you know what I mean. But non-farm payrolls, I'll take it any day of the week. Nobody's watching markets today. Like nobody cares about this information, right? And then all of a sudden, it really matters. When it matters, everybody pays attention. Unemployment rate better than expected. That is great news for the Fed. That means that they can continue to hike. It means that if they don't like it, yeah, good. Hmm. Gonna buy some oil. My position in oil is sitting at 10K. Did I go to 15? I think this is not bad. I think this shows getting so hammered on oil lately. But I think it's wrong. It's wrong. Wait, what the? All right. If anybody has any questions, let me know. Let me have a look at this. I read it again. Oh, well, that's gotta be all of the above. Oh, this is interesting. Okay, let's try. Uh, prices? I don't know. 63 sounds right, but I don't. It's so wrong.
According to a US government posting, the US is to bar imports from more Chinese companies over the Uyghur forced labor.
Oof, that's not good. Delete. Anybody speaking? Nobody's speaking. We just have like what? The 3 o'clock. I think we end up getting probably. Market is giving away all the gains, all the losses. Sorry, we're going back. All right, yeah, it's not. Wasn't too far away from the numbers. I do believe. I do believe. All right, everybody. Thanks so much for stay tuned. Very interesting. Coming back. Now, market open is going to dictate where we go, but market doesn't know what right now. Data's all over the place. Nothing and nice. That's awesome. Thanks so much for watching, man. I appreciate it. Or women, I don't know. Thank you. I appreciate it. If you have any questions, just let me know what it is you need to answer before I go. Feel free. Don't be ashamed.
Treasury's pair losses, 2-year yield 4.66% versus today's highs of 4.72%.
Why are you not changing? Currencies are back to normal. If you got lucky, you got some money back. I think we see some upside in oil. Definitely. Definitely. I'm trading it. I'm trading it. I'm in. Let's hope it works, but I'm in. Interesting that wait, what? Storage went up this week. It's up. It's pre-market, so it's hard to engage what people are gonna do with this data. I mean, as it starts getting the news cycle and everything, it's gonna be interesting. Traders didn't like the information, so some buying back of the indices, which is a good thing. But again, we could see it just like come retest and then come back down and potentially up. I mean, I don't think it's anything major. I think the story right now is the recession story that's leading the markets, not the interest rates. I don't think markets will like get affected by more interest rates hikes. It's just what it gets signaled by the Fed. So depends on what story you believe. You know, it's all about the rhetoric you tell yourself. But in this case, I mean, the 10-year is lower. It's almost it's chunk chunk lower. 5.3. We are going back to the idea that we potentially stay higher for long, which is nice if you're putting money in. Making what? Oh, making daily interest on those EDFs. Wonder where most people are that like are on eToro from. I don't think they're like they would be American. I mean, eToro does offer the copy trading, but America wouldn't be too crazy. There's so much competition, but then abroad, a lot of people get into with it. Like nothing, no major move. Even Bitcoin is bouncing back. By the way, don't forget to subscribe if you like the content and want to see. We do like whenever there's something interesting happening, I do normally let people know that I'll be live streaming. And I show up, share my thoughts, search my research, and then trade the markets, pay attention to what's happening. Usually make shorts after that. But I mean, this move was not anything major. Like if we're looking at the 1 minute, it looks massive, right? But the big scheme of things, it didn't affect much. People are expecting to get this one number that's gonna tell them everything, and I don't think we're gonna get it for a long time. And by the time we get it, we're gonna already know that we're there. Really, you probably would have been straight to kind of 9%. Thanks so much for watching. I appreciate you guys. Happy trading. Keep an eye on oil today. Keep an eye on oil today. Telling you, I have a feeling. I have a feeling it's being beat up. The news have not been bad. Keep an eye on it. Peace out, everybody. Thanks for watching. I appreciate you all.